I knew this was coming. There were warnings.
Hello, everyone, and welcome into CrushTheStreet.com. I am Kenneth Amaduri, and we got a lot to talk about today. First of all, well, let's start off with the economy, the stock market. 2015 in general has been a year of pretty significant volatility. We didn't see that big run up like we did see in 2013, and even 2014 was a pretty big up year for the markets, and we're essentially seeing the dwindling effects of low interest rates and QE basically dry up. The diminishing returns for each dollar that is being put in the system from QE is getting less and less impactful, and we have the Fed meeting on December 16th to decide whether or not they want to raise interest rates. Personally, I tend to think we're screwed if we do, or ultimately screwed if we don't. There is not a good option at this point because all the damage has already been done, and it's going to take some pain to work out a lot of the damage that has been done. And there's a lot of people out there who think that we've committed irreparable damage that cannot be fixed. So will be interesting to see. Obviously, the debt is getting out of control. We had a November 2nd deadline just a month ago, and we saw the government operating under emergency measures. And when they did come up with a debt ceiling agreement, the day following, we saw the debt rise by, it was like $339 billion, something crazy. When again, our deficit is what, like 500 billion supposedly. And then for the total month of November alone, our debt soared by $674 billion in just November alone. And again, our deficits are supposedly, a yearly deficit is roughly $500 billion. So we know that was a lie, and we know that our debt right now is roughly at $18.8 trillion. This was as of the first, so we know it's gone up a little bit since then. But really interesting to see what is going on with that. So with the debt reaching $19 trillion, even the slightest rise in interest rates, even if it goes up 1%, now we're talking about 25 basis points or 50 basis points really with the hike, but historically, I mean, if it goes up 1%, that would be nothing in terms of what we've seen historically. And $19 trillion, 1% a year in additional payments that we're not even paying yet will be an additional $190 billion. And that's going to compound. And when it gets to $20 trillion, we're talking $200 billion a year at just 1% hike in the interest rate. So we have been accustomed to seeing our economy thrive, or stay alive, I should say, by doubling our debt every few years as of lately. And if you think of it in these terms, can you imagine us over the next 5 years being at $40 trillion? Or in the next 10 years being at $80 trillion, just continuously doubling down on our debt. And then thinking about how much in additional interest that is going to cost us. You are talking about a situation that is unsustainable and out of control, and we are seeing the writing on the wall for the credit crunch to eventually take place. Auto loans are now over $1 trillion, just like student loans, which are at $1.2 trillion. What do people do when they don't have jobs? And a lot of people don't have jobs. Well, they go to school, and school is more expensive than ever. and you have the lender of last resorts backing all of these student loans, which of course is the government. And a lot of these loans are going to be defaulted on. And the money that was out there, that's out there circling the economy as debt, will vanish. And that will be a major contraction. And we have guys like Harry Dent who are predicting a major correction in the stock market. Dow 6,000. I don't know if that's exactly what we're going to see, but it makes sense that we will see a major correction in the stock market based on the fact that companies are purchasing their own stock because they're borrowing money at really low rates. They're mergers and acquisitions are happening based on this. Real estate is up. Stocks are up. People are buying cars. All of this has to do with the bubble economy. And seeing a correction is very likely. Bo Polney, which was recently interviewed, he's talking about a major correction as well. And he's using cycles and charts to be able to point this out, and the charts are very indicative of a correction, or as he puts it, a meltdown happening. Again, I try not to get too precise on when this all is going to take place, because I like to have a prudent, more stable approach to my investment strategies. I don't go all in or go all out on something. I like to be prepared and inch forward in the best way possible, prepared for the worst, but also able to thrive in the current economy. As for Black Friday 2015, U.S. sales slumped year over year. You might have heard the news that online sales rose 10% to $1.7 billion, according to ComScore. Overall spending fell 10%, including the online sales year over year. And again, you're not talking about a super strong 2014 either, but still, we are seeing an accelerated collapse happen right before our very eyes. In precious metals news, gold is down from 1,130 month to month, but rebounded from its low last week. And in silver has the same story. It sort of followed gold. It's now back over $14. And a new SRS Rocco article shows gold and oil price correlated. And if this is the strongest aspect of the gold price right now, then we have a ways to go before the next bull market, perhaps 6 to 18 months, as oil bottoms around $30. But there's plenty of disruptions in the world that could easily send gold skyrocketing. We will be releasing a Craig Hemke, aka Turd Ferguson interview, where he takes us through the numbers we are seeing on the COMEX at the moment and the historical significance of what these numbers are telling us. There has been, as you know, a severe collapse in oil, and it's happened again. It's now under $38 a barrel, and we are getting closer to the $30 we predicted, as well as Maricatusa and even JP Morgan. Oil is down, as well as the Baltic Dry Index, which is near a record low and is showing that global trade is down severely, with China primarily slowing down and transitioning in their economy. China is moving further away from the West as it is less dependent on Europe and U.S. sales, which will give them room to revalue their currency and include it in the IMF SDR basket next September, which has already been approved by the IMF to be included with the US dollar, euro, yen, and British pound. China keeps disclosing more and more gold. Everyone was very, very hesitant to believe the amount of gold that they had announced and the paltry increase in reserves that they had announced. But As of lately, China continues to disclose more gold, setting itself up for a hard currency backing, whether this is official or unofficial, to strengthen their currency. And in an article put out by Bloomberg, in November, China saw the biggest rise in 5 months, with gold reserves up 1.2% in November alone. China's capital in Beijing issued its first ever extreme warning over smog. Though the country is increasing their alternative energy sector fast, they still get over 50% of their power from coal. And China is going to try to cut major pollutants in the power sector by up to 60% by 2020, just 4.5 years away. China's coal use is set to peak by the end of this decade. Cutting coal could slow down the economy as it has in the U.S., with coal plants being shut down. Though in the U.S., solar is becoming cheap enough for individual homes to install it and pay off within 10 to 15 years of savings. Of course, this has been with massive government intervention and tax rebates and tax incentives. Russia called out Turkey on funding ISIS by buying its oil. France was joining alliance with Russia against ISIS and even called on the EU instead of NATO to help militarily before Paris attack actually happened. This was after Russia's airliner was shot down. Putin says Turkey actually gunned down the Russian fighter jet so that they could secure the oil delivery routes with ISIS. Meanwhile, Obama's solution to stop terrorism, as he said in his speech late Sunday, is to implement more gun control, specifically blocking anyone on one arbitrary no-fly list from being able to buy a gun, basically voiding the Second Amendment. Of course, this is all major news with the San Bernardino shooting, the shooting in the bombing in France. People are concerned, and in fact, I went to the gun range on this Sunday, and the gun range was loaded. No pun intended. A lot of people were there shooting, and it was a concern. It just happened. I actually do live in California, and it hit close to home, and a lot of people are very concerned, and we have the president coming around and wanting to implement more gun control, take the guns away from law-abiding citizens, and acting as if the bad people aren't going to have guns. When you take guns away from harmless people and the bad people have guns, you make the harmless people helpless. So I don't understand the logic behind that, but this is what we are dealing with in our politics of today. In the Venezuelan election, the socialists are losing power. Socialists won only 46 seats versus the opposition winning 99 seats. And they might have now enough for 2/3 supermajority to challenge the President Nicolas Maduro's socialist-based principles. And in a quote taken off of Fox, within seconds, Maduro recognized the opposition's win, saying that despite an adverse result, Venezuela's democracy has triumphed. But he recalled the long history of U.S.-supported co-ops in Latin America and blaming the circumstantial loss on a conservative counter-revolution, trying to sabotage the oil-dependent economy and destabilize his rule. We are living in unprecedented times. Things are very volatile. So be safe, be prepared, and through it all, try to thrive. You might actually surprise yourself.